Hello, investor. Have you ever stopped to think that behind the biggest tech companies in the world like Apple, Google, and Microsoft, there's another giant, a quieter one, providing the components and software that make everything work? Today we're going to open the black box of one of the most powerful and profitable companies in the technology sector, Broadcom, ticker AVGO. Broadcom is a colossus. It's the sixth largest semiconductor company in the world, but it's much more than that. Let's find out how this giant behind the giants became a silent force in global technology. Business model. Their business model is split into two parts, chips and software. In the semiconductor part, they are leaders in chips for networks, wireless connections, like the FBAR filters inside your iPhone, broadband, and storage. They design most of their chips and have others make them, which is called a fabless model. But they keep the making of critical tech in-house to protect their ideas. In the software part, after buying big companies like CA Technologies, Symantec, and more recently, VMware, they provide software for virtual reality, infrastructure, and security to the world's biggest companies, banks, and governments. The most important thing to know is that Broadcom is the result of a strong plan to bring companies together. It's a mix of dozens of companies. But how did this patchwork become one of the most efficient and profitable operations on the planet? Let's dive into their plan and what the future holds. Strategy and outlook. Broadcom's strategy can be summed up in one sentence: acquire leading companies in tech niches, optimize their operations relentlessly, and generate massive cash flow. They are excellent at putting things together. They don't just buy anything, they buy unique businesses and make them even more efficient, and the results are impressive. Where are the biggest opportunities? Broadcom's crown jewel is its network chip business. They dominate the market for silicon and high-speed switches and routers, which are essential for data centers. But the big growth engine is artificial intelligence. While NVIDIA dominates GPUs, Broadcom is becoming the go-to supplier for custom AI accelerators for cloud giants like Google, who want to lessen their reliance on NVIDIA. AI is already the company's main driver for chip sales. Outside of AI, growth comes from VMware, where there are huge chances to sell more products to the existing customer base, and from ongoing wireless chip sales to Apple. In the future, expect Broadcom to continue its acquisition journey, but perhaps with bigger and less frequent targets, after spending the next few years absorbing VMware and reducing its debt. Financial strength. An aggressive acquisition strategy needs a strong balance sheet, and Broadcom is a true cash-generating machine. Think about this number. Broadcom consistently turns over 40% of its sales into free cash flow. That's an almost unbelievable level of profit for a company this big. Yes, to buy VMware in 2023, they took on a huge debt, reaching $68 billion. This might seem scary, but a closer look shows it's under control. Why? First, the debt is for the long term. Second, their cash flow is so strong that they can pay off this debt quickly. The debt, which went up to 3.5 times after the deal, has already dropped to 2.1 times by the end of 2024. The plan is that with VMware, the yearly free cash flow, which was $14 billion, will jump to $30 billion and go over $50 billion in 5 years. The debt is not a worry. Competitive advantage. Broadcom has a wide economic moat coming from two main sources: intangible assets in chip design and high switching costs in their software products. For chips, let's take the example of FBAR filters, which they sell to Apple. These aren't just any filters, they are premium components that allow for 5G signal reception with lower power consumption. The technology behind them is the result of 40 years of engineering and development of non-silicon materials, something extremely complex to copy. That's why Broadcom dominates this market, selling about $20 worth of content per iPhone, well above competitors. In networking, it's the same story. Broadcom has the widest variety and depth of chips, and invests so much in research and development that it's practically impossible for a competitor to keep up on all fronts. Developing a single new chip can cost up to $100 million. In software, the advantage comes from switching costs. Imagine you're a big bank. Changing your virtualization software from VMware or your security software from Symantec is an expensive, risky, and time-consuming project. Broadcom's strategy is to dig in with these big clients, selling multiple solutions and becoming essential. More than 80% of their biggest customers use more than 5 of their solutions. They are hard to remove. This focus on being the undisputed technology leader in critical niches, backed by a fortress of patents and trade secrets, ensures that Broadcom's intangible assets directly translate into sustainable, high-margin revenue streams and a very wide economic moat. Risks and uncertainties. Despite all these strengths, investing in Broadcom comes with a high uncertainty rating, and the risks are clear. 1. The company is increasingly dependent on a small number of giant customers. In the AI business, it's Google. In wireless, it's Apple. A change in spending strategy from either of them could have a significant impact. For example, Apple is expected to develop its own Wi-Fi and Bluetooth chips in 2025, which would cause Broadcom to lose some sales. 2. Human capital risk. CEO Hock Tan, in his 70s, is the architect of Broadcom's winning strategy. His ability to execute acquisitions and optimizations is legendary. New management might not have the same Midas touch. 3. Acquisition strategy risk. The strategy itself is a risk. Targets are getting bigger and more expensive, and resistance from regulators is increasing. If Broadcom overpays for a deal or is prevented from buying, the growth thesis could be shaken. 4. Chip market cycles. Finally, like every semiconductor company, it's vulnerable to the industry's supply and demand cycles. Capital allocation. If there's one area where Broadcom really shines, it's how they handle their money, which we'd call exemplary. Hock Tan's way of thinking is clear and it works well. They put their money into things that help the company grow, whether it's through their own research and development or by buying other companies. That's how they create value. They're not afraid to borrow money to buy important assets like VMware because they're confident they can make enough cash to pay it all back quickly. And they don't forget about their shareholders. Their plan is to give back 50% of the money they made last year to shareholders as dividends, and they also buy back their own stock. They manage to do it all, invest a lot in their business, buy other companies, and still give a good return to their investors. It's like they're following a textbook on how to do things right. Conclusion. We've reached the end of our analysis. So, is Broadcom AVGO a good investment? On the positive side, we have a company with a wide economic moat in many markets, a cash flow generating machine with amazing margins, a powerful new growth path in AI, and one of the most skilled and disciplined management teams in the world. On the negative side, the risks are real. High customer concentration, the risk of CEO Hock Tan's succession, and the continued reliance on large, risky acquisitions for growth. Investing in Broadcom isn't a gamble on a single technology. It's an investment idea based on the relentless execution of a strategy of adding and improving. It's a bet on management that has proven, time and again, to be able to create huge value. For the investor who understands and is comfortable with the risks, Broadcom offers a chance to be a partner in one of the most profitable and strategically well-placed operations in the tech sector. What about you? What do you think of Broadcom? Do you believe in the AI idea and Hock Tan's genius? Leave your thoughts in the comments below. If you like this analysis, don't forget to like, subscribe to the channel and turn on notifications for more videos like this. Thank you for joining us on this journey to the heart of a true tech giant, and until next time, disclaimer, remember, this video is for educational purposes only and does not mean we recommend buying or selling assets. Always do your own research.